Hi everyone. In this video, we're going to go through Rivian's third quarter 2022 earnings conference call to try and decipher what's going on with Rivian stock. So let's get right into it. Of course, this call happened on November 9, 2022, and I'm going to start with the CEO and founder Robert Scaringe and talk about, highlight some key comments that the CEO made. So, starting with the comment that it was the 1 year anniversary of the start of production for the R1T to just emphasize how young of a company this is. We launched 4 variants across our consumer and commercial vehicle platforms, and they've produced more than 15,000 vehicles as of September 30th. They also launched their go-to market operations services, which include physical service centers, mobile service centers, delivery operations, fleet operating systems, financing, insurance, remarketing, and the Rivian Adventure Network, our in-house developed and produced network of DC fast chargers. This is a lot for a company to do in such a short amount of time. For me, this always raises concerns about execution and efficiency to be moving so fast, to be doing so much in such a short amount of time. There's going to be some efficiency lost in the process. The good news for Rivian is that they've got a big backlog in consumer and commercial products. They've got a strong balance sheet with $14 billion of cash, and they're trying to ramp production in a cost efficient manner. The third quarter was another record for the Rivian team. They produced over 7,300 vehicles across R1T, R1S, and the EDV product lines. Of course, the EDV is what Rivian is selling to Amazon, electric delivery vans. As of November 7, we had over 114,000 net pre-orders and reservations for R1 vehicles. These orders are from the United States and Canada only. So this is the challenge that Rivian is facing right now is they've got these 114,000 pre-orders, and it's their big goal is to ramp up production efficiently enough and cost effectively enough to fulfill these orders, because if they can't ramp up quickly enough, they risk these customers canceling these pre-orders and moving to another competitor. So that's the challenge that they have. Of course, they can move faster, but that's going to cost them a lot more to ramp production if they're doing it inefficiently. They could move slower and make sure that they're doing it more cost effectively, but then they run the risk of losing these customers. So it's this kind of balance that they're having to play. And you look at 114,000 pre orders, and they produced 7,300 cars in the third quarter. So at this pace, look how many quarters it's going to take to fill these pre-orders. They really need to ramp up production, which they are. They are ramping up. And they continue to deliver the EDVs to Amazon and expand their Fleet OS offering. This is a major partnership for Rivian, their partnership with Amazon. Amazon has committed to buy a lot of these EDVs, and it can be a sustainable source of sales for Rivian longer term, as well as the positive signal it sends to investors to have a partnership with Amazon. Moving along, in early 2023, they plan to introduce the Enduro motor and our first LFP battery pack into the commercial van line in their normal production facility. These changes will enable optimized performance at significantly lower cost. It's imperative that they get the introduction of these new technologies right. So they've allocated meaningful time to quality loops and process checks in the first quarter. Like I mentioned earlier, it's difficult to introduce so much innovation so quickly, and they need to be careful to not, in their haste to get these innovations out into the market, to not cause a bigger problem down the road where they're going to need to have recalls and maybe start all over or something in that nature. All right, now moving along to the CFO, Claire McDonough, and the state she starts off saying, They produced over 7,300 vehicles, delivered nearly 6,600 of them, which was the primary driver of the 536 million of the revenue they generated. Similar to prior quarters, gross profit for the quarter was also impacted by inflation of raw materials as well as supply chain challenges, which caused the need for expedited shipping. It's going to be challenging for them to ramp up production. They've got all those backlog of orders. They're only producing 7,000 in the previous quarter. To ramp up production right now at a time with elevated costs across the board, it's a big challenge for Rivian, and it's been one of my concerns for investors of Rivian stock. All right, I'll end with whatever's on this page here. They've got, we talked about earlier, they had 14 billion in cash. They remain confident in their ability to fund operations with cash on hand through 2025. Um, uh, the time for launching the R2 platform and expect it will launch in 2026. They expect the R2 platform will unlock a massive global market expansion opportunity for Rivian. All right, so that could be something investors can look forward to. The timeline is for 2026, but investors should not think that this is set in stone. Be prepared for this to be moved back to 27, 28, 29, or maybe moved forward to 2025. Companies with these kinds of long term forecasts often change them, so don't expect this to be set in stone. 2022 full year guidance of 25,000 total vehicles produced. The supply chain continues to be their largest source of uncertainty as they ramp production. Yeah, there's shortages everywhere, shortages of semiconductor chips, of all of these other types of materials that EVs need, battery components and the like, and that's not going to get any easier. It does not seem like, because you've got Tesla, you've got Rivian, NIO, Ford and GM are coming out with their models. Everybody's coming out seemingly with their own EV model. They're all now fighting for these same materials and components to ramp production. Meanwhile, there's a shortage already. So these shortages are not going to ease. If anything, I expect it to be difficult, the difficulties to persist. Here's something that I found troubling that the CFO said here. Going forward, we no longer plan to provide an updated pre-order number during their quarterly earnings call. This is troubling, and this to me is coinciding with another concern I had with was that these pre-orders can easily be canceled, and couple that with the fact of the supply chain shortages and the big difference between the the production output and the backlog has me thinking there's going to be a lot of cancellations in those pre-orders, and now management is telling us that they're not going to provide us an update of these pre-order numbers, so we're not going to even know if those pre-orders are coming down, how much they're coming down. So this should be concerning to Rivian investors. And finally, their long-term financial targets. They see a clear path to approximately 25% gross profit margin target and 10% free cash flow margin target. Um, okay, that's a reasonable long-term gross margin target. Tesla is recently achieved 25% gross margins, so they're aiming to get to that level. Tesla's already there. It remains to be seen if Rivian can achieve that similar gross profit margin. All right, so looking through their conference call, we got a little bit more insight into what's going on with Rivian stock. If you like this video, subscribe. I've got more like this one, and if you do, I'll see you next time. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.